Yo, guys, what's going on? I hope you're all doing well. So, given that trading itself is a very popular topic across the board, today's video is going to help you understand how to exploit the New York session. Mad love to everyone that passes through to the New York session. I do speak at speed and I'm talking about price going up and down, talking about orders. But how do we actually make sense of what to expect in the New York session? Well, firstly, we need to understand what is actually happening in the New York session. We know that when New York opens, this is where most of the liquidity comes into the markets. So if you go over to Forex Factory, you can get an overview of what time the New York session is going to start kicking off. You can see down here where when you select market, it brings you the sessions and it shows you when there is an overlap in the markets. Right now, the UK session is open and it ends in 4 hours and 56 minutes. You can see Tokyo is closed and that opens in 12 hours and 56 minutes. But New York will be opening in less than 56 minutes, which is 1 p.m. UK time. Now, this is the pre-markets. Now, we want to focus on when the actual futures markets open because that's when the business starts. Okay? When you get the crossover of London and New York, that's when you're going to have mad volatility and mad volume coming into the charts because you've got market makers in London, hedge funds, bank managers. They are all in London waiting for the New York session and they're waiting for those guys, hedge funds, managers, money, banks, you name it. They are all getting ready with their trigger fingers to start running orders. This is the best time. Once the London and New York overlap happens, it's the best time for you to trade. Now, how do we exploit the New York session in relation to cryptocurrency or even in any asset class itself? Firstly, we need to understand the first hour and a half of trading in the New York session is all about orders being placed from the night before. And of course, the banks, hedge fund managers have witnessed what has happened in the Asian and the UK session. If you go back in the charts, ladies and gentlemen, you'll come to understand that there is this ebb and flow in between the actual marketplaces. For example, you can see here Asia on the Friday marked price up in Bitcoin. Then we come all the way back down just in time for the New York session. Okay? Then they consolidate price over the weekend. Then coming into the start of the week, you can see Asia marks price down lower and UK follows through with a move higher. New York continues with the same intention and marks price up until the next Asian session. We then see in the same Asian session on the Monday, Tuesday, where they marked price down lower. And then the US session initiates the return back up. So how do we exploit the New York session? Well, it's important that you understand what has happened in the previous sessions so that you can understand what New York is likely to do. So here's an example. Imagine that you have the Asian session here and you have the UK session coming into play and then the New York session itself right here. If Asia decides to mark price up to the upside, what we want to be aware of is, are there any vector candles present in the Asian session right here? Then we would look for the UK session to see if they're going to try and consolidate back into these points right here to recover those vector candles. Now, the UK session is going to do one of two things. It's going to see that Asia has marked price up and it's going to say, okay, I'll tell you what, if it looks like you have trapped $100 billion worth of longs in this area here, well, we're going to start adding to those longs as well. And you'll then get yourself a structure where price holds its gains from this zone right here and the UK session holds on to the gains as well. In other words, the UK session will be building positions alongside the Asian session in time for the New York session to do something about it. Because when the New York session opens, they're going to say, wow, Asia have marked price up to the upside. UK have added to those positions. Now we have got an opportunity based on previous positions that we have built in our previous session to either run for the money and take advantage of all the traders that have gone long in this zone right here, hit their liquidation points and start preparing price for Asia tonight, where we will see a return on our investment that we've been marking down into the price action to see price move lower, building longs at lower prices to move back up again in Asia. So with this structure itself, ladies and gentlemen, go back in the charts and have a look to see where you see that. We established it right here. Asia marks price up. They reverse it back down. They use the UK session and the New York session to finalize some more orders. We've got Asia right here, marks price up, brings it down, traps the traders to the downside. UK brings price up, and so does the US session. Let's go back again. Where are there instances where Asia sets up price for the New York session? Here is an example. Look at this. You've got Asia, marks price down lower. Okay, then they return price back up. The longs are being trapped in this zone. UK session then says, you know what? We're going to take advantage of all the longs that are being trapped inside of this zone from corresponding sessions over here. And we're going to try and see if we can get more positions built in this zone. What happens afterwards? New York comes into play and rips price to the downside, prepares it for Asia. Asia marks up, retraces, and does the same thing again. Look at how in Asia they marked it lower. They brought it up in time for the new UK session, and then it collapses to the downside in the New York session. They did the same thing here, marked it down lower, reversed price back up, trapped the longs in the chart, and then the US session steps in with a stop hunt rise in this blue vector candle, and then they make the run for the money. So you can look to exploit the New York session in one of two ways. You can base it on the idea that Asia and UK are preparing price for the New York session, or you can trade exclusively the New York session itself and take advantage of the intention of the New York session. So that brings us into the Brinks Box itself. The Brinks Box formation has two ways that it can form. It can form at the lows of the session, or it can form at the highs of the session when we come into the open of the US session itself. Look at what they did yesterday. Let me bring the chart closer on the smaller timeframes to make sense for you. Look at this. In the Asian and UK session, Asia were trapping the longs. So we had this accumulation period right here. Mr. Market Maker's building his shorts above key notable areas. Notice how they're doing it all above the key 20,000 zone right here. So where's the 20,000 point? Right there. There's the 20,000 zone in the chart. So they're marking up their shorts above this area. Asia itself is saying, look, man, we're getting traders. We've got commitment right here. By the time the UK session comes in, they say, yo, you know what? Let's take advantage of this. Let's start adding up as well. So they start doing their business in this area, and then they decide to run price to the downside. Okay? Now, this was when the UK session itself, or the New York session itself, was coming into opening. Okay? Because we had the bank holiday over here, and we were waiting for the New York session to open after its day off on Independence Day, July the 4th. UK session then says, okay, we can take advantage of the traders that were long here and hit their liquidation points, which is the recovery of the green vector candles. They can then also build their longs by tapping into the liquidation points of the longs who are in this position right here. So at the same time, market makers in Asia and in the UK start realizing returns on their shorts whilst activating and hitting all the liquidation points for the retail traders who are long. The same time they activate those liquidation points, what do you think a liquidation point is? It's an order. So when you are going long and your liquidation point is realized, a sell is triggered. In order to sell, someone has to buy. So the UK market makers then mark price down lower. They open longs, as you can see, red vector, red vector, red vector, forcing price down lower. They're building their longs, encouraging traders to close their longs and turn short, mark it all the way down towards the open of the New York session, where the US Brinks session consolidates for a little while, builds a bit of a W formation right here. Here is your little structure right here. And then they take advantage of the traders who have been running their shorts because they got caught out in their longs over here. And then what does the New York session do? Stop hunt rise, drop, continuation to the upside. And they fully recover the zone and bring it back into the same spot that they had built shorts from before. And they did exactly the same thing right here. Here is another example. To see that this move coming into fruition, let me show you something. Let's pay attention to this zone right here. Now, the US session marks price up. Now, it was last night in the US session where we saw this big move to the upside. Now, around about this time, I was focusing on price action and saying to myself, okay, Mr. Market Maker in New York is preparing price for Asia. All right? So this is one way you can also exploit the US session. You can either take advantage of the US session where it's setting up price, or price has been set up in the UK session for the US, or you can take advantage of the US session where it's setting up price for Asia. Okay? So last night I shared this projection out to the patrons of the channel. What we had here is the big move up, as you can see. Bitcoin's making its move up, coming in towards the close of the New York session. They had only come back into the same point that they had sold into. Yeah? Well, let's just look back a second. What were we just talking about over here? They had moved price up into this same zone over here and sold off from it. That's what market maker does. He moves into the same spots that he's able to trap liquidity. Liquidity is trapped here. Liquidity is trapped here. For every attempt back up into a zone that you will see that where traders could be potentially trapped, because this is where most traders are buying, because they're buying on the idea of the hype. Okay? You can put the probabilities in your favor and make the assumption that if price doesn't follow through from that zone, then there is a good chance that they're actually preparing to move price down again. And we saw that with price dropping down at the start of the New York session at the start of the UK session when we came into Tuesday for the trading week, where we had the pending open of New York. The same thing happened last night. We saw price had aggressively moved from the US session all the way up, recovered the intention from the UK session, and they moved price back into the same spot that they had previously sold from again. So these areas right here are adverts for Mr. Market Maker to induce traders to step in. You probably saw yesterday that most of social media was saying Bitcoin long, buy, 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 buy. Well, at that point in time, conventional wisdom and practice would have said bullish candlesticks. Cool. Well, look what happened there. They reversed it and completely wiped out all those guys who opened their trades, which then takes me towards the projection that I provided. What was the understanding? The understanding was in the final moments of the US session itself marked price up in preparation for the New York session. Now, the test is understanding when to get in. And that's what trading is about. It's always about what point do you decide to start running your trades. These orange lines are indications of high volume nodes that we can use as points of reference to understand at what point would price start to get engaged in reference to volume profile. But volume profile is just like one of those things where you're understanding the transactions of traders. We can see that in the hybrid system in relation to the way the vector candles present themselves. Now, going into today's price action in the New York session, when we go live today at 2 p.m. UK time GMT. If you are new to the channel, be sure to like and subscribe so you can get notified about that. So you can take the understanding of this video and put it into the live streams. Notice what Asia has done. They've marked price up. US session marks price up towards the close of the session. Asia follows through with a move down. UK comes back up and recovers inside of that same session of Asia, that is. And the UK session is now waiting for the US session. UK session, given that we have got another 40 minutes until the New York session opens, where we are likely to see price move towards certain zones to fulfill the trap that was set in New York. Again, if you're looking to exploit New York, you either wait for the Brinks Box plays, or you look to see what happened in previous sessions to understand what is the narrative. Are they favoring higher or lower prices? Are they building more shorts than they are building longs? Look at the profile of the way they are moving. What is it telling you? Why can't we break above this 20,000 zone? What is it about 20K? Is it because it's the psychological area where everyone is expected to buy Bitcoin at this point because it was the previous high from before Bitcoin made its move to the upside? Was it the first time Bitcoin hit 20K that it's going to get triggered at this point and people are going to start buying up again? What a perfect trap. What a perfect time to accumulate commitment from traders and build shorts inside of this zone so that you have got the liquidity trapped inside of here to sell into and test when you're hitting their liquidation points at previous points in the chart. So, ladies and gentlemen, that is a breakdown on how to utilize the New York session. I've done this video just so that you guys can make sense of why I'm screaming and shouting in the charts. Bitcoin to the upside, Bitcoin to the downside, 355 Bitcoin. Yes, no, you get the idea. Steve phone calls. Not been speaking to Steve for a little while, ladies and gentlemen. He ain't talking to me. But I hope that does make sense. If you are new to the channel, you can download these indicators free of charge. Just make your way over to the Traders Reality website. If you want to dive a little bit more into the hybrid system, run yourself over to the Market Maker tier or the Pattern Watchers tier in the Patreon itself. We have a good conversation and we talk about a lot of things inside of these moves with cryptocurrency. Here is the post that I gave in relation to that projection. Now look, I'm showing this video to you just to get you to understand why I came to the understanding of why price was likely to reverse from this point. Okay? It's got nothing to do with, oh, wow, a projection played out. I'm not interested in that. What I'm trying to do is trying to get you to understand the justification that at that point in time, based on what we've spoken about in this video, what led me to believe that this structure was likely to play out. Okay, good evening, ladies and gentlemen. What's going on? So you can see what's going on in the charts. Remember what we shared earlier on in relation to EXO. Zoom out. You can see the collection of delta happening in this zone. Look, Mr. Market Maker, marking price higher. Delta's increasing. Then there's a pause in the delta, and 10%. And you look at it, and then you say to yourself, hold on a second, what's going on? Something's changing. Volume is reducing. 12, 14, then a big push, 32 million. That's the trap. Look at the liquidations. Look at how they just absorbed 3.9, 4.1, 4.6, 1.4, hitting the ask, lifting the ask. Then they start the descent. Then they collapse it all the way down. What are we going to get? Drop, retrace, continuation lower. Look at how dispersed the delta is now. It's up and down. 16 million, 8.7 million, 12 million, 1.1. Dead liquidity right now. That's what we expect for Asia. Going into price action, it looks as though our structure seems to be playing out. We bounced away from the psychological high. Remember, we were only going to see a movement from that zone based on the interest of traders coming in at this point. Look at the high volume nodes. Now we're going to use these high volume nodes as potential profit targets on the basis that if you were to run shorts in this area and price stays in this structure, then we would anticipate them to come down. Another attempt back up tonight maybe, and then we see them coming down. Are they going to do exactly the same thing that they did yesterday? What they did here, drop, consolidate, back up, UK Brinks, stop hunt low, rise, continuation down lower. This is all going to be in preparation for tomorrow's news announcements, ladies and gentlemen. Okay? So there you have it. That's what we look for when we're trying to make sense of Mr. Market Maker's behavior. There's a reason as to why price behaves the way it does. And it's not because of anything that influences cryptocurrency. If anything that influences people in cryptocurrency to buy or to sell, the market maker is going to be present to provide that order. They said it themselves, ladies and gentlemen. If you go over to a document that was been released by Alameda Research, you will find that they pry on the retail traders' excitement for when a coin could potentially move up or down. Where is it? Here we go. Opportunity set is unique in crypto where 1. Highly volatile, 2. Fragmented markets, early days of equities, 3. Retail euphoria during speculative periods of bull markets, buy at any price I want or I'll miss the coin going up 10x. Okay? And intense bearish periods in down markets, sell at any price, I just want to get out. Market makers exploit you all day, every day, ladies and gentlemen, and it is through the utility of the hybrid system where you are going to avoid getting caught up in these sort of plays. Go and look last night on social media, how many people were pumping for Bitcoin to go even higher from this point. They sure paid the price. Now we're waiting for the New York session to realize what could happen today. We're going into the news announcements, which we are anticipating the JOLTS job openings coming out today at 3 p.m. We also have the ISM services PMI and the FOMC minutes. I'll be diving into this all when we go into the live stream later on today. Ladies and gentlemen, mad love and respect. I hope you've enjoyed today's video. Be sure to like and subscribe. And I'll see you when we bring the fire at the stream. Take care of yourselves, family. Peace.